just to reference what you said, a big game developer in a closed environment might come out, I'm going to spend $2 billion on marketing, I'm going to go blast it on the platforms, and hopefully you'll buy my game. You can't take your information out of the game. And you're saying, well, look, I'm the president of Immutable. I'm going to take that $2 billion and issue it as tokens to the users. I'm going to issue it as funds to marketplaces so people can innovate on this platform. And you're making a conscious decision that, yeah, this is how I'm spending our treasury on these very different aspects. I'm not going to give a third to a half to these platforms. I'm not even going to market to you, right? You're not going to try to sell me. You're going to empower me and give me ownership. You're one of the few presidents that I've heard really articulate that, Robbie. And I don't know, did I get that right? Or maybe you can go a little further, because some people, you get asked questions a lot of times, well, why are you allocating tokens here? Why are you putting a chunk of tokens there? And you're like, this is how we grow this. This is the only way to grow this.
Yeah, and again, it's not a magic business model. It's you're giving players more value, and that can be measured. And when I talk to people, big game developers from the Web2 world, and they say, well, this is cool, it's interesting, we'll have a corp dev team on this, we'll look at it defensively, but why would I do this? You can say to them, well, you care about three things. You care about cost of acquisition of users, you care about lifetime spend, and you care about retention. Maybe some other smaller mechanisms. But all of those metrics can be measured and are quantifiably improved by using an NFT-driven business model. When users actually own their assets, their lifetime spend goes through the roof. They'll spend 10 times more because you will spend more in a house that you can sell and one you can't sell by a large factor. It is an asset rather than an ability to use something in a confined ecosystem. When you own assets that give you exposure to the future success of the game, your retention rates skyrocket and your viral sharing propensity skyrockets. You're happy to share this because it's part of your identity. And when you can incentivize people to adopt your game through play to earn, your cost of acquisition plummets. You can say, hey, we'll literally pay you $5 if you can get to this tutorial. And that is profitable because otherwise you're spending $20 to acquire through a leaky bucket of Facebook and Google ads. And so it's this brand new way of distributing in a way that it aligns incentives between the people actually bringing the value. And I think the perfect example of this is, let's look at streamers. They have, for the 15 years they've been around, arguable whether it's more like 10 as a popular profession, only monetized through patronage, which is nuts. Like, patronage is the monetization model used by barons to pay bards back in the 1700s. And so to say that that's how we should measure and reward people who are streaming digital content in the 21st century is simply insane. And now we can say, well, hey, we can actually measure the exact value a streamer brings to a game in terms of eyeballs. And when Ninja wins a Fortnite tournament wearing a John Wick skin, he can sell that exact John Wick skin to a crowd of clamoring fans via a Twitch overlay. And all of the added value to that NFT is value that he keeps. And so you align incentives between the distributors and the actual gaming publisher themselves.
Yeah, it's a great analogy. And we've seen it happen with crypto, right? We've seen the fact that, you can share it, you can be invested in it. We've seen that have this, triple digit year on year exponential growth. And now you're saying, well, yeah, this is what NFTs are going to do. Probably it's the second order, takes a little bit more understanding for people, but everything you're saying makes a ton of sense. And I'd love to jump in to how you guys plan to solve it, because it's important to think about how you approach this problem. Robbie, the biggest complaint I get in my DeFi Academy is the gas fees. Everybody's complaining every week about the gas fees, because what I try to do is I get my students right into these DeFi protocols so they can understand them quickly. Sometimes it's their first yield swap, it's their first liquidity pool, it's their first hot wallet. And I get them through to do it on the Ethereum chain because guess what? It's where the liquidity is, it's where the simplicity is. And they end up soon complaining about gas. This stops a lot of things from happening out there transaction-wise. Tell me how you decided to approach this problem, why you decided to use the Ethereum chain, but also how you can lower your gas to zero, because that's how you can start trading $2 NFTs.
Look, we've pretty much been at the coal face of trying to scale Ethereum since day one, since December 2017, because back then we launched the first multiplayer game on any blockchain. It was called Eatbots. And all of the logic of this game was on-chain, it's on smart contracts. And so today, if you try and run around, it will cost you $5,000. Like, it is the most gas inefficient thing. And we learned a lot about what should actually exist on-chain versus off-chain. But we also had to learn a lot about scaling Ethereum from day one. And so when you hear about things like batched minting or deferred minting, these are things we invented along the way in order to try and shortcut optimizations on Ethereum. But really, they are band-aid solutions. And what we ended up really looking at is, well, what was the possible scaling futures for blockchains? Was it building an entirely new blockchain, sometimes known as, alternative L1s like EOS or Tron or, Solana, which is popular today? There's been plenty, and there's been plenty of them called ETH killers. Is it building another blockchain with a bridge to Ethereum called a side chain like Polygon? Is it using a state channel based solution, which we looked into? Is it using an optimistic based scaling solution, or is it using a zero knowledge rollup based scaling solution? And these two came a lot later in the piece. And this stuff, like Plasma and state channels, never really worked out. And fundamentally, the reason we don't want to build a new chain either is we strongly believe that network effects are going to determine what fundamental chain wins. And I'm not saying Ethereum is going to win, but right now it has by far the most network effects. And we think it's really important to use them to be where everyone wants to be, and also to be where the most security is. And by far, Ethereum is the most secure in terms of game theoretic cost to attack the network, in terms of decentralization of nodes, and actually people who store full copies of the block history, which is necessary to ensure sort of data decentralization. And so then you have this question of, well, what's the best layer 2 scaling solution? Optimistic or zero knowledge rollups? And optimistic is great for some things in the medium term, like DeFi. If you want to scale NFTs, it is hands down zero knowledge rollups. And so that's a long-winded way of saying we arrived at this choice with very high conviction. We arrived at the choice of Starkware, who's exceptional as providing in the space with very high conviction. And what this allows us to do is to take a whole bunch of user trades or creations. So trading an NFT from user to user, you're creating it as a business. And we can basically fit 600,000 inside a single block of Ethereum, where this actually enables us to do more than 10,000 transactions per second when Ethereum reaches 3. And this is not a magic 10,000 per second. This is not a, I won't name names, but pretty much every other TPS out there is theoretical. This is what we've proven in production. We've done tens of millions per hour. And so what this enables is the planet scale that is required to support all of the stuff we've discussed on this call. If you're going to do term deposits for billions of people on Earth, you need TPS that makes Visa look like a turtle. Like, you need the ability to have throughput that is incredibly efficient, but also never loses its security. Because at the end of the day, we're talking about tokenizing trillions of dollars worth of stuff in the long run. If you don't believe me, Vitalik himself has said Ethereum will be all in on zero knowledge rollups as the scaling solution for the future. And so that's pretty much what we do. And the very short technical summary is it's compressing. It's like uploading a zip file of activity to Ethereum itself. And that means it's really, really efficient in terms of carbon footprint as well, which we completely offset. And I think I'll leave it there. I think I've spoken enough about the tech.